Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. Today is Wednesday, July the 10th of 2024. And we're so happy that you could join us today, whether you're watching live for the hour at 8 a.m. Central Time, or if you're watching the show later in the day on a different outlet. We're glad that you're here. Well, Financial Issues is a ministry that educates people about financial issues from a biblical worldview. So let's get right to it today with our stewardship verse of the day. It comes from Job 42:12. And the Lord blessed the latter days of Job more than his beginning. Well, Job had obviously been a good steward in the first part of his life. He honored God, and the principle of reaping and sowing had yielded him a nice little fortune. He was very, what many of us would call, blessed because he had lots of things. But that is really what caught the attention of Satan, who is the devourer. Satan wrongly accused Job of loving God because of his many blessings, rather than rightly recognizing that Job had many blessings because of his love for the Lord. But Satan's a liar, and that's what he does. Because Job's devotion to the Lord above all, including the loss of his family and all of his possessions, and his ultimate refusal to reject the Lord, Job was restored. Not only restored, but enriched and blessed beyond what was lost. What do you think, Seth?
It's a good one, Shana. This story is one I'd encourage all of our listeners to read. Definitely, it's a heavy one for sure, but it's a true story. It showcases the sovereignty of God working all things for his good. And there's definitely mystery to it as well. I know Job there's a good chance he may never really have understood why all these things happened, but he was confident in God nonetheless. And I think the story can be summarized really as just a lesson on the fact that God does as God pleases for God's glory, and he does get the glory in the end. And in Job's life, like you said, he was faithful in the midst of his suffering. And so God blessed his later years way, way more than his early years because of it. And so I think the reality is that for many of us, Shana, also, we may not experience the suffering that Job did. Some of us may. But I do believe that if we're faithful to God in our youth, as Job was, especially when it comes to finances too, I think there's a good chance that we'll experience tremendous financial blessing in later years, specifically in the retirement years. That's not a guarantee of anything. That's not the prosperity gospel. That's just like you said, it's the law of reaping and sowing. Right. And it kind of leads to our teachable moment for the day, Shana, which is how to make the most of these later years, specifically those years in retirement. So kind of to begin, how should we view the retirement years? Is it to be an expectation for us, like I'm going to retire, I'm going to get there? Or is it more kind of akin to something that we earn at the end of a fruitful career? What would you say?
Well, I'm sure Job wasn't expecting the loss of his fortune and his family as a reward for his devotion to God and his good stewardship. Sounds like he had done everything right when it comes to raising his family and running a profitable business. So I bet he didn't see all of that coming. Our focus really should always be on honoring God, no matter the official status of our employment, whether we're employed, whether we're retired, or whatever that might be. Our main focus should be on loving and serving God.
Yeah. And so once we get to that retirement stage, I think it's assumed that we either try to get there because we don't want to work anymore, or perhaps we can't work, whether we get too old, or maybe we're phased out by younger workers, or we have a health problem or something like that. So in light of that, Shana, what are some of the best ways that we can preserve an income for those retirement years?
Well, the first thing you need to do is start early. And if you didn't start early, start now. And to start, you really need to live within, or rather below, your means so that you have excess income. And then you can save that income and invest faithfully in a God-honoring way. So, accumulating that nest egg, so to speak, so that you can supplement the different forms of retirement. The old retirement planning strategy used to be the three-legged stool, where you'll have income from a pension at work, income from Social Security that you paid into for so many years, and then you supplement that with your own retirement savings, I would say more and more and more, it's become kind of a two-legged stool, which is Social Security and what you do for yourself. Now, employers still contribute a little bit in some cases, but for the most part, you really have to be looking out for yourself when it comes to that.
Yeah. And, it kind of brings to mind, to use the word kind of like, it's the concept of being holistic. The whole approach to our financial strategy is not just long-term investing, but also long-term saving as well. So young folks like me, it's good to be thinking about what's going to happen to me when I'm in my 60s or 70s. How am I going to be able to prepare for that? I think it's really good, Shana. How do we utilize these avenues of health before we have the money, or rather before we reach the retirement stage? How do we utilize these different avenues of wealth, as you said?
Well, there's lots of avenues or vehicles that travel down those avenues. I guess there's the individual retirement accounts. Those are IRAs, whether they're traditional, meaning tax deferred, where you put in pre-tax money, or whether it's a Roth, where you put in after-tax money, but you get tax-free growth. There's employer-sponsored plans. Everyone's kind of that works and receives a paycheck through traditional means is forced to pay into Social Security and Medicare as well. So you definitely should take advantage of any matches to your savings from your employer. That's going to give you an immediate 100% return on whatever portion that they match. You should save to establish your emergency funds. That should be done outside of your investment portfolio. But inside the investment portfolio, or inside the portfolio, you should invest the funds that you have, so that you are not only accumulating what you're saving, but you're being able to grow that savings as well.
Yeah. And in your estimation, Shana, do you think it's going to be easier for future generations to retire once they reach that age, or do you think it'll become more difficult? Do you think it'll remain the same? What do you think?
It's really hard to say. I can say this, that the younger generation does have a huge advantage that maybe the baby boomers didn't have. There is a huge wealth transfer that's taking place over the next 2 decades. It's already started. There's going to be over $80 trillion that changes hands, that gets passed down from the baby boomer generation to younger generations. Now, the younger generations, especially post-COVID, have really been in kind of a YOLO mode. You only live once, and they've been doing a lot of experiential spending. That is, meaning spending on having experiences, traveling, going to concerts, sporting events, so on and so forth. I guess maybe because home ownership is a little bit out of reach for them, they've been spending all that money on that. So it really depends. I've worked with people and their money for a long time, and I've seen some of this transfer take place, as older clients pass their inheritance to younger generations. Some of them take it all out and spend it on whatever, a boat, big vacations, fixing up their house, whatever it might be. And then some of them will continue to defer that money until they get into retirement. So it really just depends on the person. I think Social Security needs to be delayed for those in the younger generation. So if you don't plan on waiting as long as you can, I think that at some point, if the government's going to have any shot at fixing Social Security, the age is going to have to be changed for people who haven't already started benefits. So don't panic if you're already there.
Yep. And now let's get a little personal with it, Shana. How should we personally view the retirement stage? Is this a time to relax, kick back, spend time with family perhaps, or is it a time in life that's unique that we can actually do more?
Well, I think it's all of that. We all have such a unique journey with the Lord, so I can't really speak for everyone. But I think for most of us, should a season of quote-unquote retirement come upon us, we should view it as a change to our daily schedule, a new opportunity to serve God, maybe in a different environment. So rather than getting up every day and going to work and using our gifts and abilities in the workplace, we're able to use our gifts and abilities and resources to get more involved in church or ministry, maybe go on mission trips, and yes, perfect the art of resting in the Lord and studying His Word. So I've not seen really any biblical description of retirement that says that we should retire from our daily responsibilities and live a carefree, worry-free life with our feet propped up on the beach, or on endless vacations, as the retirement commercials that we see on TV would suggest that we do.
Yeah, that's good. That's a good reminder too, Shana, for me, because I have wondered, like, okay, just get to retirement. It's the finish line. It's really not the finish line. You might have 20 or 30 years left. What are you going to do with that time? I think it's a good question to ask.
Yeah. It's a long time, and you know, you can't really get there if you haven't put back excess savings and really prepared for that. So good stuff. I hear the music. We got to take a break. We hope that you will stick with us. After this break, we're going to be back with more financial issues, and our phone lines are open if you're live, 610-363-1110.
So I was just getting on my feet, and I met someone, and I got pregnant, and I wasn't ready. How am I going to raise a baby? And I barely can take care of my daughter and myself right now. I Googled abortions, and I scheduled an appointment thinking it was an abortion clinic. When I was at the clinic, after they told me how far along I was and that the baby had a heartbeat, I cried, and it gave me a minute by myself in the room. I broke down and I prayed to God. I asked the Lord to, when I walk out of those doors, to just give me the strength to be able to go through the pregnancy. Made my decision at that time. I'm super grateful that I'm able to go down this journey with my daughter, and I'm just super glad that I didn't have an abortion. I've learned how to trust God. It feels amazing.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Welcome back to Financial Issues, everybody. It's good to be here with you this morning. We're talking about retirement here, Shana and I, and we had a great conversation in that first segment. If you missed it, make sure to go back and listen to it. But just the last question for you, Shana, to kind of finish this conversation here. So in the scriptures, we're warned against idleness. And I think idleness and retirement, sometimes we kind of think of those two things in our minds together, because we were talking in that last segment about not wasting those retirement years and making sure that we're still doing the work that we need to do with the breath that we have. But the scriptures warn us against idleness often. We see David and Bathsheba. David's first sin was not adultery. It wasn't murder. It was his idleness. He should have been off fighting in the wars with his people, but he wasn't. How can we apply this wisdom of not being idle to our retirement?
Well, I think it would serve us well if we remember the response that the bad steward got from the master in the parable in Matthew 25 and Luke 19. Wicked and lazy is how the master addressed that third steward. So I would assume that this depicts what the steward was doing with the time that he could have spent working on putting his resources to work. And his reward, well, that was the time that he used to be about his own business rather than being about his master's business. So he had already received his reward for, I guess, what little he did, protecting, as he said, the master's original investment. But I think that if we adopt the attitude that retirement is all about me and living my best life, then we're going to learn what Solomon learned, that there is no true fulfillment and contentment outside of loving and serving God.
Amen. Well said.
Well, folks, if you haven't visited our website, it's www.BizTV, financialissues.org. We would encourage you to go there to learn more about the business. About the ministry. But while you're there, go ahead and sign our petition. So our ministry is all about biblically responsible investing. And, over the last, 5 years or so, we've seen more and more companies in corporate America jump on the ESG bandwagon, the DEI bandwagon, and we've really had to sell a lot of companies. We were on the verge of doing so with Tractor Supply because during Pride Month that just ended at the beginning of this month, they had posted some things, and there was a video that came out about how woke Tractor Supply was, or at least the CEO was. Well, after a good bit of backlash, and we were working on spearheading some backlash of our own, but we didn't even need to do that because that came soon enough for Tractor Supply, and they issued a statement saying that they were just going to focus on the business of Tractor Supply and what was important to their customers rather than contributing to gay pride parades and really pushing this DEI agenda. So we applaud that. And, we've been asked by some partners what we can do to thank Tractor Supply. So we've made it very easy for you. If you go to financialissues.org and scroll down just a little bit, there on the left side, it says take action really big and sign the petition. And then you can see the letter that we've drafted to Tractor Supply, thanking them and congratulating them for just doing what they do. Committing to do business, to be excellent in the way that they do business and to serve their customers well.
Yeah, and Shana, it doesn't seem like we're asking much because we're just asking them to be a good business. But I think in today's world, it actually is really a step of courage. I think we are asking them to do a lot because they're going against the basically everything, the whole entire liberal machine, and so we should applaud them for that. It's good.
Yes, we should. So we shouldn't just be that that loud, cranky complainer, but we should also give credit where credit is due, and be encouragers. And so this is a way to give them a pat on the back and encourage them to continue in that. We just want companies to operate in excellence, do what they do it well. That way, we don't have any trouble investing in those companies. We don't have any trouble with our conscience being forced to support agendas that don't line up with our moral values. So, sign the petition.
Yeah, I did drop that link in the chat, by the way, folks. Who are watching
good.
There. Yep.
Thank you for that. Well, let's shift gears to a little bit of economic news. We did have this past Friday or last week, we had a lot of labor reports come out, a lot of information about the condition of the labor market. And Friday's jobs report sure does give the Biden administration fodder for the strong economy rhetoric that they've been peddling. But a deeper look shows that Bidenomics is failing. U.S. employment increased in June by about 206,000 jobs thanks to government and healthcare services hiring, which made up about 3/4 of the payroll's gain. So, good news is that jobs are increasing, but not good news that job creation is not coming from the private sector. The government bureaucracy is growing and growing and growing. Economists polled by Reuters had forecast that payrolls would increase by 190,000 with a 4% unemployment rate. We did get 206,000 jobs with a 4.1% unemployment rate. So more evidence of a weakening labor market can be seen in the change in the unemployment rate. So you will hear that 4.1 is high, unemployment is higher than it was last month, but that it's still very low, and that is true by historical means. But we have to see which way we're going. The unemployment rate only increased 0.09% to 4.1% for June, but now you're going to hear that that employment is still at historical lows, and the Biden administration has created more jobs than any sitting president. Yeah, I won't belabor that, but fact check it. And that this low unemployment is indicating that we have a strong labor market and full employment that will keep our economy strong. What you're not likely to hear from the Biden administration is that the 3-month average for unemployment is now 4%. If you average out the 3.94 and 4.1 that we've seen over the last 3 months. But what you won't hear is that the current 3-month average of 4% is now half a point higher than it was in the first half of 2023. The first half of 2023, the average was 3.5%, which was also the low for our current cycle. So unemployment has indeed bottomed, and it looks to be headed up. About 277,000 people joined the labor force, according to the last report. And, of course, the Biden administration will say that that is a good thing. And that did help to account for the increase in the jobless rate from 4% to 4.1%. And this would be a good thing if we were seeing more native-born, red-blooded Americans coming into the labor force and getting jobs. But the fact of the matter is, foreign-born employment is growing much faster. I don't know. I had a chart in my notes, but we had a lot of technical things going on this morning. I don't know if we have it or not.
Yeah, guys, do we have that chart there? We might have that up there. There it is, Shana. Yep.
Oh, good. Yep, we do have it. Okay, so if you're watching, if not, if you're listening, I'll try to explain it pretty well for you. But if you're watching, you're going to see a chart there. You see a blue line and a red line. And what you see on top is, in the blue line, is foreign-born workers. And you see that job growth really exploding. You see a dip in both of the numbers right there. That was COVID. But then after COVID, you see that just exploding, the foreign-born workers line, while American workers or native-born workers were the red line. So you see both of them drop during COVID, and you see the red line even come back some, but the red line is nowhere even near what it was pre-COVID. So American workers are being replaced with immigrant labor. No doubt we are seeing the economic impact of an open border on our labor market. This higher unemployment rate, along with a reportedly lower inflation rate, that's what we're hearing, gives the Fed cover to start the much anticipated interest rate cuts in September. They're saying again now, which is what I've been, which is the theory that I've kind of stuck to.
Welcome to the
all
party.
Along. So, if they indeed cut rates in September, that will goose the markets and prevent the veil from being lifted on Bidenomics. Except for those of us with X-ray vision.
That's right.
Oh, and don't forget about the previous month's revisions. 11 out of the last 16 employment reports have been revised upward, including this last one. So for April and May, revisions, 111,000 jobs that were reported to have been created have been revised away with a pencil. So annual wages increased at the slowest pace in 3 years amid an expanding labor pool, adding to the flashing warning signals in the job markets. So how did the market respond? Well, it responded by making all new all-time highs. On Tuesday, the indices remained mixed as Jerome Powell testified before Congress, with the S&P and the NASDAQ hitting all new highs. The Dow ended the day slightly negative, the S&P slightly positive, and the NASDAQ slightly positive as well. The pre-markets this morning are indicating an open in positive territory, with the Dow hovering near the flat line to the positive side, the S&P indicating a 0.2% increase, and the NASDAQ a 0.37% increase. So we'll revisit that here in a little while. And if you are watching during the live show, our phone lines are open. You will be the first caller in the queue when we come back. 610-363-1110 is the phone number if you want to get into the call queue. Seth, would you take us out?
Yeah, I'd be glad to, Shana. Again, folks, 610-363-1110, number to call in. Phone lines are wide open, so you can join the conversation. You can also join on the chat as well. Half-hour audience, if you have to leave us, we hope you have a great day. We'll hopefully see you tomorrow, or on the other side of this break. Coming up, we got more financial issues. We'll answer your partner questions as well. Again, 610-363-1110. We're live today, so join us. We'll be right back after this break.
Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
Samuel Case, news anchor with FISM News, sits down to read real comments from real viewers.
All righty, let's see, a bigger one here from Spectrum Nomad. That's a fancy name. Finally, a non-biased news source that tells everything how it is without having to push their opinion. You know, it's not necessarily true we're not biased. We are Christian, we are conservative, but you're totally right that we don't try to push our own opinions or commentary in the story. So it's really great to hear that you're picking up on that.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. We're glad that you are joining us today. And hopefully you found us the longer version of the show if you traditionally listen on an outlet that only carries the short version. Well, Seth, how about we get to some partner questions?
Yeah, let's do it, Shana. Let's start with Bill. Bill's 54. And he's saying, I have a large investment in land. It is by far my largest investment. Not a position on the tracker for this, but I'm adding it to the tracker. Adding it to the tracker would skew my other investment categories anyway. So I would estimate the value to be 25 to 50% more than my entire investment portfolio. Do I need to track this investment? That's a good question, Shana.
No. So the only things that you're going to add to your portfolio tracker are your investable assets. For the reason, you've really kind of identified the reason there, Bill, is that it's going to skew your your investment portfolio. So, maybe your land can represents, capital that would come to you if you sold the property. Maybe you're leasing the property, generating some income, but I would not consider it part of your investable dollars, because here's the problem that you're going to come up against really quickly is that if you put it into the real estate sector on your portfolio tracker, you're going to be way overweighted there. The reason that you use your portfolio tracker is to kind of guide you into, which investments are overweighted, which ones are underweighted. So if you're following the tracker, it's going to tell you, you need to sell some of your real estate investments and reallocate them to the places that you're underweighted, which if it's that much, it's going to be every other situation. So unless you plan on selling your land, then I wouldn't put it in there at all.
Good stuff, Shana. Next one we have is Gene, 69 years old. He says, I hope I haven't missed comments on this stock already. If so, I apologize. What should we be doing with UT35 since it'll be taken private at $22 by early first quarter 2025 and is currently trading around that number? Should we ride it out and continue to collect the 8% dividend? I'm down a little more than 44% in this stock, but I've been collecting dividends since 2021, which does offset about a third of that loss. What should Gene do here, Shana?
I see that Bobby has that same
yes,
question.
Bobby does too as well.
A very similar question as well about UT35.
Yep.
So that's one that, we're in the process of checking a couple more things, but we're probably on the verge of issuing a sell alert for that particular stock. So, I think there's plenty of other opportunities in the UT sector. And we'll probably be adding some more in the next week or so in utilities. So if you already have the three that are there, maybe you want to hold on to that one. I don't think another dividend is going to be paid for another month or two, but I would say stay tuned. Watch your email alerts. We'll probably be issuing a sell alert for that one.
Awesome. Yep. And Bobby, yes, that was, I'm glad you caught that, Shana. Bobby had the same question. Melody's up next, 63 years old, wondering what your thoughts, Shana, are on the high dividend stock that Newsmax is offering to its viewers. We talked about this a little bit a couple weeks ago. Also, what would be the difference in buying it now versus waiting till it's listed on the stock exchange?
So a good bit. What they're offering now, so Newsmax is talking about going public and doing an initial public offering or an IPO of stock where they'll be listed on a stock exchange and retail investors would have access to buying it. I'm always leery of IPOs. They tend to come out with a lot of emotion, a lot of excitement. The price typically spikes and then falls. I also would want to see, I would suspect that Newsmax would be a biblically responsible stock once it does go public, but it probably would take us a while to come up with a buy recommendation for it. If we did at all, we would really need to see some indications of profitability, growing sales and earnings, a good business plan, so on and so forth, and I don't believe that that's the case right now. What they are offering right now on their website is for accredited investors only. So you have to, and it's a preferred stock, a convertible preferred stock. What's there? So those are two different things. The common stock and a convertible preferred stock is very different. To be an accredited investor or to be eligible to invest in what they're offering right now, you have to hit one of a couple of different criteria. You either have to have a liquid net worth, not including your home, of around $1 million. You have to have had income of $200,000 a year plus for the most recent 2 years, or you have to be considered to have exceptional knowledge by having some type of professional license or working for some type of firm where you would have that kind of extra expertise in evaluating those kind of things, like having a securities license or some things like that. So probably not something that I would take action on at this point.
Good stuff, Shana. Next one we have is Timothy, 63 years old. Timothy is new to investing. I've been listening to your show now that I have the money to invest. I do have a Roth IRA that I have not contributed to since 1992. It's grown from $4,000 to $52,000. Do I contribute $8,000 annually to the Timothy Fund Roth IRA or open a non-retirement account and invest in that manner? I'm hoping to combine the money at my retirement in 2 years and then receive a small annual income. What do you think for Timothy here, Shana?
Well, I do like the Roth because you get the tax-free growth there. So you could make the contribution to the Roth. What you have to keep in mind, though, is that you want to have good diversification and balance between your types of accounts. So sounds like you've got a pre-tax account with your employer plan where you put money in pre-tax. That's going to grow tax deferred, which means that you're going to pay taxes at some rate in the future that you don't know yet. And my opinion is taxes are going to be higher in the future than what they are today. That is called qualified money. A Roth is also considered qualified money because both traditional IRAs, Roth IRAs, employer-sponsored plans, it's called qualified money because those types of accounts qualify for special tax treatment. And they qualify for special tax treatment because the government said so. So Congress passed laws creating IRAs and employer-sponsored plans, and whether it's a Roth or a traditional, and the government has the authority and the ability to change those laws, including how they're taxed, what you can do with them. In fact, they did change distribution requirements recently, and they changed distribution requirements for inherited IRAs in 2020, which was very positive for the government because they're going to force money out of those individual IRAs sooner rather than later, which means that they get their taxes. Wasn't such a great thing for people who are inheriting those types of accounts. So Timothy, I would say make sure that if you've already got both of those and you don't have an investment account already, perhaps you consider putting at least some of that money into just a regular investment account. Maybe put some to the Roth as well. So diversification is the key. I think we have the ag report coming up.
Yeah, it's coming up, Shannon. I'd love to squeeze one more in, but probably won't have time for the ag. Yeah.
All right. Well, we're going to hear from Craig Haugaard with our ag report. After that, we're going to take a short break, and we'll be back with more financial issues. We have a caller in the queue, and we'll get to Rose. But if you have questions, 610-363-1110 is the phone number to call. And we have Craig coming up.
Craig is coming up. Hey, Shannon, really quick here. Craig is recovering well. If you folks can keep on praying for him, that'd be great.
This is Craig Haugaard with your Financial Issues Ag Update for July 10th. A corn spent yesterday in a holding pattern as improved weather and stronger crop ratings appear to be already worked into the current price structure. At the closing bell, December corn was 0.75 cents higher at 408 1/2 cents per bushel. Beans continue to move lower as they're weighed down by a forecast calling for good moisture levels, cool weather, and also profit-taking in the soybean oil market. As a result, November beans ended the day 19.5 cents lower at $10.80 per bushel. What little news we saw for wheat was international in flavor. Russian FOB offers improved by $2 per metric ton, but the U.S. hard red winter wheat cash market is already back to a $40 per metric ton premium to Russian wheat. In other news, India thanked Russia for stabilizing their fertilizer prices in the 23-24 crop year and announced that they plan on expanding their grain imports from Russia. At the closing bell, Minneapolis September wheat was unchanged at $6.17 1/2. Kansas City was 1/2 cent higher at $5.77 3/4, and Chicago advanced by 1.5 to close at $5.72. Cotton futures continue to trade near contract lows. Yesterday's close found the December futures down 50 points as they settled at 70.55. Livestock futures had a pretty tough day. August live cattle futures were $2 lower at $185.37.5 per hundredweight. August feeder cattle dropped by $3.45 as they settled at $255.72.5 per hundred. And we had August lean hog futures $1.12.5 lower, ending the session at $88.40 per hundredweight. Class 3 milk futures ran into some technical selling as they tested the 22 moving average, and as a result, were lower for the session. In fact, at the closing bell, we had August futures down 30 points as they closed out the day at 20.13. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
In a world where financial decisions can feel overwhelming, it's easy to lose sight of what truly matters. But what if there is a way to align your financial goals with your deepest values? Financial Issues has helped us navigate the complex world of finance through a biblical lens. By prioritizing and investing in a way that honors God, Financial Issues has empowered us to focus on what truly matters: our family, our faith, and our future. With Financial Issues by our side, we can invest knowing that our financial decisions are in line with our values. Take the first step today and become a Financial Issues partner to access rich online resources, training tools, and guidance for biblically responsible investing. Head over to financialissues.org and learn how to invest your money in a way that honors God. That's financialissues.org.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Thanks for sticking with us today. Let's get to our phone lines, and they are open. After we get to Rose, you would be the next caller in the queue. If you want to call, 610-363-1110. Well, hi, Rose. You're live on Financial Issues.
Hi. I so appreciate you taking over for Dan and just doing an excellent job. My portfolio's doing better than the S&P or anything else as I look over the past year. So thank you so much for all that training and all the stock suggestions. I have
You're welcome.
E14 that was on your buy list a couple of weeks ago, new to the buy list. They surprised me. They took 2 cents per share out of my money market at Fidelity, which blindsided me. I didn't know they were going to take money out. I thought they put money in. They're going to have a dividend of 40 cents. So, yeah, it's going to pay for itself, but I was just shocked that they could do that.
Yeah, they can.
Yeah,
so,
Rose, it's interesting. We actually had a partner, Brandon Shana, had a very similar question asking about this particular stock, has a fee attached to it, and he's wondering how this works.
Yep. So this particular stock is a foreign stock. It's called an ADR. And so the custodian has to do some extra things for foreign stocks that they don't have to do for U.S. stocks. So they have to collect dividends. They have to maintain records. They have to convert it to dollars, so on and so forth. So they do charge a fee for this. And as you pointed out, Rose, the dividend and, hopefully the growth in the investment over time will more than compensate for that fee.
How would I know ahead of time that this is going to happen?
I guess you would have to get with your brokerage and find out how they charge. Sometimes they will take the money out of the dividend before they pass it through to you. Sometimes they will do, I guess, what they did in your account, and it can vary from custodian to custodian. So I would maybe just contact the custodian and ask them, or go back and read through your agreement and see. They probably have an FAQ or something about what the ADR charges are.
Beautiful. Thank you so much.
Great. Thanks for calling, Rose.
Thank you, Rose. And great job, too. Keep it up.
Thank you. Bye.
Yep.
All right. Are we ready for David?
I think so. I think David's ready from North Carolina.
Okay. Hi, David. You're live on Financial Issues.
Good morning.
Good morning.
Hi, David.
So I'm calling because I have one of these situations. So I started investing under the Dave Ramsey plan before I found the biblically responsible side. Switched to biblically responsible, so I was investing monthly in, 5 or 6 of the Timothy Plan mutual funds. And then I wanted to learn more about the individual, stocks and work in that. So we have a total of 4 accounts, 2 Roth, 2 rollover IRAs. My rollover IRA, I started doing the individual stocks and doing that, and it's been working pretty well. Bottom line is I'd like to kind of transition away from the mutual fund and get into the actual portfolio for us. We are both 59. So just wondering your thoughts on a good way to do that. Do you wait till after December when they, provide their annual dividends and that? We've owned them about 7 years. So just kind of your thoughts on that.
Okay. Do you own the A shares or the I shares?
A shares.
Okay. And are you using the portfolio tracker?
I am not, because it doesn't fit. Like, none of it fits in there right now.
It doesn't fit in there?
No, because there's quite a bit that's in mutual funds and then a smaller amount that's in, like, the individual stocks.
I got you. So what I would suggest is watch the videos on the tracker and put all 4 of your accounts. Are you managing them all as one portfolio? I mean, I know you're kind of using different models right now, but the suggestion is to pick one model and use that model for all of your investable assets. So get into the tracker, and you'll want to pick whatever model you're using. Maybe you're using the 55 to 65 model right now as you're approaching retirement. And then you'll put all of your positions in, and whenever you click the sector box, your stocks, it'll be easy to do. I'm sure that you have some of the Timothy funds and ETFs that are going to be in the model that you're following. You'll be able to match those up easily. And then for the ones that aren't in your model, just code them to other. What's going to happen is whenever you get to the output page, you're going to see that you're really overweighted in other. And so you're going to have to make some adjustments. If you are going to need, I know that there's at least 3 of the Timothy funds or 4 of the Timothy funds that are probably included in your model. What you can do, since you bought the A shares and you paid an upfront sales commission, is you can exchange. So if you have a fund that is not in the model that you're using, and once you get everything into your tracker and you see maybe now you're underweighted in one of the funds because you're now looking at the whole portfolio, maybe you're underweighted in one of the other funds, you can do what's called an exchange. So you can go from the fund that's not in your model into the fund that is in your model. And then once you've made all of those positions and you've got all of the funds up to your target, then of course you would need to sell the rest of those funds so that you would have the cash available to deploy into the other areas. Does that make sense?
Yeah, that makes sense to me. And then the selling part, I'm still thinking I would wait till after mid-December when it pays those dividends and long-term gains.
You could, but I don't think it's totally necessary. That's really up to you.
Okay. Thank you very much.
All right, David. That was a great question. Thanks for
David.
calling.
Have a great day.
All right.
Good. You know, Shana, speaking of David, we got another David on Ask Shana. Not that same David, and not a partner either. But he does have a good question. My wife and I currently have Timothy Plan retirement accounts. Also, we have a savings account at very low interest. We've looked at CDs for these funds. We want to be biblically responsible about it. So would opening another Timothy Plan account for investing be advisable versus CDs or high-yield savings? We're talking about 90 to 100,000. High-yield savings are also an option. What would you have for this, David, Shana?
Well, one thing that I would want to clarify is because he mentions he has investment accounts, retirement accounts, and he has a savings account at very low interest. So if it's the money in the savings account that he's talking about, I wouldn't look at anything other than like a high yield savings, like a money market, or maybe some really short-term CDs if he wants to, the activity of managing that. If it's investable money, now you got to just make the distinction between investments and savings. Your savings, if it's emergency savings, you don't want to invest that in anything that's long-term like the equities or mutual funds or ETFs. So I wouldn't even put that money on your portfolio tracker unless it is considered to be investable.
Good stuff, Shana. Next one is Valentine. Valentine is asking about CD20, listed under the buy list CD sector, but is identified as real estate according to the company's profile. Is there an explanation for this, and should it be of concern as it affects our asset allocation? And Valentine is 50.
Yeah, so Valentine, you're right. It is classified under real estate, under most classification systems that we see, but it's... for us, it's going to be classified under the consumer discretionary because it's real similar to some of the home builders that we have in consumer discretionary. So this particular company, rather than building homes, develops land for those homes to be built on. So I guess that's kind of a niche thing for financial issues that we're going to classify it under discretionary.
Yeah. This next one, Shana, might be the last one we have for today. Carolyn became a partner with Dan at the beginning of COVID, has a small portfolio, not rebalanced until now. Her biggest concern is technology. She's got TE91, TE1, and then one particular stock that I'm not sure is on our list, with technology representing about 66% of the entire portfolio. 70.5 she has gone back to teaching, working full-time, plans to for 6 or 7 years. Started the income model with Dan, and I'm reinvesting my dividend. She says, I listened to one of Dan's videos where he said, if you're in income, do not sell a stock. Please advise what I should do since I'm up so much in these stocks. She mentions TE91 as a big one. What do you think, Shana, for Carolyn?
Yeah, so Carolyn, you have just perfectly described what's happened with the markets, with the indices. We've had a real run up. Last year, they were called the Magnificent Seven. Mostly technology stocks have been responsible, and even more than just technology stocks, AI technology stocks have really been responsible for the run up in the market. So at 70 and a half years old, I don't think it's a prudent thing to be 65% in technology. Also think maybe go back and watch those videos again. You may be misunderstanding what Dan said at some point. I don't believe that he ever advised to never sell a stock. I think he was more so talking about when you're rebalancing and you have shares paying dividends. If you sell your shares, you're going to lose some of that income. But I definitely think you have to rebalance here according to the model that you're using. Well, folks, that's it for us today here at Financial Issues. We're glad to be with you, and Lord willing, we're going to be back tomorrow and the rest of the week, helping to remind you that everything belongs to the Lord. The Master is coming back. There's going to be a test, and we want to help you be found good and faithful stewards. Find out more about our ministry at financialissues.org and come back tomorrow for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.